Καλησπέρα σε όλους. Hello to everyone. This discussion is going to be in English. I'm Tasos Zachos. I am the editor-in-chief of Fortune, and I'm very glad to be back in Delphi after 1 year, I think. In this session, we're going to discuss about the investment as a catalyst for economic development. And I'm very glad to welcome to Delphi Economic Forum Mr. Gregory Dimitriadis, Chief Executive Officer, Hellenic Corporation of Asset Participation. Mr. Dimitriadis, welcome.
Thank you very much for the invitation.
Mr. Duncan Bonfield, CEO of International Forum of Sovereign Wealth Fund. Mr. Duncan, hello.
Hello.
Tina Adatia, Executive Vice President and Product Strategy of PIMCO. Hello, Tina. Let me see, we're a lot. Mr. Xavier Tessier, Strategy Director of BPIFrance. Hello. And also Lawrence Yanovitch, Coordinator of the One Planet Sovereign Wealth Fund Network. Hello.
Καλησπέρα σας.
Καλησπέρα. So, I would like to start a discussion. We heard in a lot of discussion panels today about the geopolitical instability, about the inflation pressures and the energy crisis, which are affecting the investment, your role, and also the outlook not only for the Greek economy, but at a European level. So, Mr. Dimitriadis, Gregory, let's speak like this. I would like your first comment about this situation.
Yes, thank you very much. Thank you for the invitations and congratulations for bringing Delphi Forum back to Delphi in full speed. And I think it's great that we have a panel with sovereign wealth funds.
I agree.
And also members of the associations, both from the private sector and from BPIFrance, another member. And in this context, I think that it is important in order to see how sovereign wealth funds work and how we will also become HCAP, the Greek sovereign wealth fund, as good as the other ones. But of course, as you mentioned, we are in a difficult situation. We have the impact of the crisis of the war in Ukraine, which also comes along with a very difficult energy crisis and even fears for food crisis.
Yes.
So we have all this situation where the markets are in a difficult position. There will be growth in the European Union, but still we see that following all this, there is a small decline to be expected there. And in this overall field, however, the good thing is that Greece remains attractive for investments, for all the things that we have built so far, and other speakers in the forum have also explained. There was a record last year for investments coming into Greece for FDI, which is 19.6%, which is a great step forward. And of course, this shows that there are opportunities there. In this context, despite the geopolitical challenges at HCAP, we are also continuing to believe in our strategic plan, which is to also do a better job for our subsidiaries and our participations, but also to build our investment internal structure in order to attract some of the investors and partner with other sovereign wealth funds, and of course attract investments like we have here, PIMCO and others. And for that, there are specific projects that, despite the whole crisis, they still move on. As you know, the concession for Attica, which is going to be a major case, and we had Adatia that broke the record for us. Now Attica is the next big thing. It is something that we continue despite the climate, and there is a lot of investment interest. So we know that this is going to be successful, and we have other cases as well. We have the ports of Alexandroupoli now. We have already interest for the port of Kavala. We have the marina in Corfu and other projects, as well as even the regional airports. Everybody has been very happy that with the 14 airports that are currently operated by Fraport.
Many projects on progress.
Yes, many projects, and at the end of the day, the whole thing is that HCAP is here to not just manage the public property, but to increase the value of the public assets. as it happens with all the other age caps in the rest of Europe and the world. And to do that with very clear beneficiaries, because we want to support the Greek economy, the citizens that receive services, and they can get the impact, the social impact of these investments, and of course the environment, which is very critical for us. And this is a strategic, very integral into our strategy.
Okay, thank you very much. So, Duncan, you represent the sovereign wealth fund. It's more difficult now to increase value in this situation.
Well, let me just give you some evidence from our most recent research. And we've undertaken that with State Street Associates. We've got a view into trillions of dollars of investment flow. And there are three big trends, aren't there? There's obviously international conflict, there's inflation, and then the central bank policy response. So what you're seeing from big investors, big institutional investors, is that there's exit from emerging markets. So there's a big flight of money towards developed markets, safer markets as they're perceived. And then within those markets, you're also seeing equities. They're not taking any further risk in equities. If anything, investors are going to defensive stocks in that area. But you're also seeing greater investment in fixed income. So all of that is a response to the market fluctuation. Within foreign exchange markets, you're obviously seeing flight again away from those countries most affected and with the greatest proximity to the conflict. So all of that is really to be expected under these circumstances. So, and then the beneficiaries you're seeing from that, you are seeing beneficiaries, as I say, in fixed income and also things like US Treasury inflation protected stock bonds. So you're seeing those markets benefit as well. So that's what the data is showing us from this. But what is clear, I think, and building on what Gregory says, and I know we're going to come to this as well, is that investors are seeking, where is a good long-term investment for our money? And who can we partner with? And so if you think of things like there's been a big increase in private equity markets that sovereign wealth funds have put their money into. And very often you're finding that they'll partner with different funds and different approaches to enter those private equity market and put their money to work for the long term.
So long-term investments are not affected so much?
They're not affected. There's obviously not everything is long-term. But yeah, overall there's a lot of stability in the markets. And indeed people are also seeing it as an opportunity in some cases. They're contrarian. So they go, actually, there's real value in this market. We can step back in now that asset prices might be below fair value in our consideration. So, yeah, longer-term investors can take a different view in terms of where their capital is deployed.
Nice. Anita, I would like, I would like your comment about the PIMCO insight for the situation.
Yeah, so just picking up on some of the themes that have already highlighted, the Russian invasion of Ukraine, the sanctions that followed, as well as the gyrations that we've seen in the commodity markets, have cast an even thicker veil of uncertainty over what was already quite uncertain initial conditions to start off with. And we are likely to expect an increased amount of volatility as a result. And if you think about the growth implications generally, the growth implications are we started off sort of mid-cycle, probably this is accelerating now to late cycle. The global economy is facing what we would describe as a sort of stagflationary supply shock, which is led by higher energy and food prices. It's led by consumer sentiment that is now lower. It's led by supply chain disruptions and also hawkish central banks. So as a result, potentially, lower growth, but still above trend, because obviously we have a reopening of the economy, and higher inflation. And that's lockstep with the Eurozone as well. Eurozone potentially more affected because of the amount that's coming from, the amount of gas that's coming from Russia. And in that environment, I think I would agree that you do need to take a very long-term view on your portfolio. Don't get distracted by very short-term volatility in the market, especially as a sovereign wealth fund.
think about kind of the diversified portfolio, the sort of outcome that you want to achieve, but also maintain a level of liquidity which allows you to take advantage of that uncertainty at the right time. And I think Duncan highlighted some of that as well.
I think that uncertainty and volatility is the new reality for all of us. So, Xavier, is it right? Hello.
Yes, no. BPIFrance, so the French sovereign wealth funds, and so we have a very domestic mandate. And so, of course, facing this crisis, we will continue to support our companies in portfolios, take care of them, help them when needed. But more globally, I think that sovereign wealth funds as long-term view and long-term investment, probably with not the same liabilities, for example, as pension funds, and so they have the capacity to think on a longer view. It was interesting to see that during the pandemic, sovereign wealth funds support strongly their economy. You have a very interesting report from Professor Bortolotti from the Bocconi University that has shown that. To some of them, it was even a bit too much. I mean, because sovereign wealth funds should keep a sort of independence from the government in terms of keeping their economic objective and not just to supply government funding. But I think that they could play a key role in this crisis. And I would say also that you should never lose a crisis. And we need, of course, to be less dependent from the fossil fuel from Russia. But I think the idea is not just to about alternative way of having fuel energies. The idea is also on a long-term basis to think about how to be less dependent globally from fossil fuel. And for example, I hope that in Europe we will be able to set up a mechanism and initiative to develop green energy and renewable energy on a larger scale.
Nice. Okay. We all speak about the Green Deal, the sustainability agenda. So I would like to ask you, Mr. Dimitriadis, how you change your role into a real public wealth fund, and how do you focus on the sustainable agenda?
For us, sustainability is not just one element of our strategy. It is integrated in our strategy. So we don't see it as something separate. We want it to be part of our plan, and it is part of our strategic plan, but it is also the commitments that we have agreed with all our subsidiaries. So this is something that we want all of the family of HCAP to follow. At the end of the day, even as we said earlier, there is the crisis with the war in Ukraine, the geopolitical overall situation, but the climate crisis still continues. It doesn't stop. And even when the geopolitical issues calm down, the climate crisis will still be there. So it is something that we have to actively deal with. And in a sense that the fact that we push for renewables, for example, and PPC is very aggressive on that and will continue to be aggressive on that, is actually the solution. Of course, temporary, there might be some use of the lignite, but the real answer to the problem is neither gas nor lignite. The real answer to that is to do more renewables faster. And this is what we want to push forward as a strategy for all our subsidiaries, is to see solutions that can help in each category that each one of our participation can do. Even we have the public transport of Athens. Okay, we had COVID, so we were not probably using public transport so much, but now that COVID subsides, it's important that we leave our cars and live and breathe in a greener, better city.
And also the Hellenic corporate of assets is in a big transition too the last year. You change your model and your role in the economy.
Of course, because like in every country, and that's why we discussed with Duncan a lot, and as well with Lawrence, is how did the sovereign wealth funds in other countries manage to contribute to the growth in each of these countries. Of course, in Greece, HCAP was created at a time when we had MOUs. There is this perception that some parts of that is, we collect money to give directly to the debt. But that's not the thing. It's not the role. The real situation, the real role and the real opportunity here is to do something different, is to have the public assets, utilize them for now and for the future generations. We have been discussing exactly this, that this is not just a scope for the next term or for whenever election is. That's why also HCAP has this independent role, is to manage for the future generations how we can increase the assets and that we all have, because it's public. But we do it, of course, with private sector criteria, and that's why it is very important that we engage also with the private sector directly to get advice, to see how we will attract them to invest more, and of course with other members, like within the forums that we are included already for One Planet, and we will be part of.
I would like to ask Duncan how you see this transition here in Greece, and also, do you believe that the sovereign wealth funds are incorporating ESG criteria to their investments? What's your opinion?
Well, again, and we did some research with Lawrence's organisation into this, and so 2020, you would see about 25% of sovereign wealth funds had a fully fleshed out ESG investment
25%.
strategy. 2021, that number was 71%.
Okay.
So you've seen an amazing transformation among sovereign wealth funds in focusing on ESG and climate-related investment. And they're very keen to do that. They have ESG strategies. Our research also shows that they've recruited people into their teams, their ESG investment teams, and they're looking to invest their money. Now, there's a couple of approaches in there. Some of it is looking at, okay, where is our carbon risk in our portfolio and the danger of stranded assets? And we've seen that, for example, in some US coal. You've seen some stranded assets there. So there's looking at the risk, but also looking at the opportunity. So currently the number one investment target for sovereign wealth funds is renewable energy projects.
Yes.
That's the most popular, but it also includes things, low emissions transport. So, with cars as the most obvious one. Energy storage, energy distribution, forestry, water, and then it even extends into the effects of climate change and mitigation, so catastrophe insurance and that kind of thing. So there's now a whole array of investments that sovereign wealth funds are very keen to invest in. And the reason they do that is not because they're generous, not because they're donors, because there is a return in those markets. So ESG, the environmental and governance are well proven now that they have superior returns for the amount of risk exposure.
Tina, you are an expert on the ESG section, so I would like also your comment, and I would like also to ask, in which sectors should we expect a boost of demand, and where should we expect a risky transition on the terms of the sustainability agenda?
Okay, so I think it is important to note that this is a long-term journey, and sustainability and ESG is a really long-term journey. And our expectation is that because of this bottom-up pressure from voters and consumers, you're going to continue to see governments, regulators in the private sector on the corporate side investing very heavily in the transition from brown to green. But really that transition and the speed of that transition and what's going to benefit, I think, is really dependent on the time horizon. And it's also important to note, as you go through this transition, it will lead to a boost in economic growth, but it also could lead to winners and losers and destruction of capital in some more brown sectors. If you think about in the short term, I think some of these themes have already come out. On the auto side, there are transition risks on the auto side, because there's just this need to go to cleaner vehicles effectively. And if you think about kind of sectors that are likely to benefit, some of those have already been discussed: solar, wind, but also LED lighting as well. Now, if you look on the other side, kind of in the short term, actually what you see is on the energy side or utility side, it's not obvious that the transition risks are paramount straight away. And the reason why is that the energy market prices and the demand is still there. So that is a mitigating factor for those particular sectors. And importantly, coal which most in the developed world are sort of moving away from, is still quite a big focus and demand in the emerging market economy. In the sort of medium and longer term, we would expect those transition risks to accelerate. Sectors that would probably have higher transition risk outside of autos, other transportation sectors as well, airlines, etc. And then I think sectors that will continue to benefit, renewables, of course, but also semiconductors. And you're seeing that sort of demand for sort of super secular demand for semiconductors. And I would say that, again, it's important to take that long-term view. And it's important for all investors, sovereign wealth funds included, to, obviously decide what they want to do in terms of their outcome, but also ensure that when you're analysing the risks in that portfolio, you are analysing those climate risks as well, because they are extremely important. Regardless of what you think about ESG, they are important because they are going to have an impact on returns going forward.
This is a big discussion also here in Greece, if we should make the transition to more clean energy so fast or not. Okay, this is a strange period. Xavier, I would like to ask you something a bit different. You are all together from the same sectors. Do you think that you can set a collaboration framework in order to find more investment opportunities? I think you announced before some days a collaboration between the funds in Europe, the Middle East, and North Africa.
Yes, and we at BPIFrance, we started cooperation with sovereign wealth funds almost 10 years ago. I mean, that was because most of sovereign wealth funds were increasing their in-house capacity first, and they were also turning to alternative assets, such as private equity. And then you need a sort of pilot fish in the various regions in which you want to invest. And so we started co-investment partnership with some funds, for example, with Mubadala, with QEI in Qatar, and others. First, it was mainly focused on French PE market, and then we expand this partnership to overseas, always with the French angles. But now we of course are including this environment challenges and sustainable development in our partnership. And I would like to say that the UpSwift coalition is very helpful in that way, because we meet with with funds with which we have already partners, and so we are discussing how to really implement the three principles, the three pillars of the UpSwift: the alignment, which is how we integrate our investment horizon and process; ownership, which means how we work with our companies in portfolios; and integration, it's how we integrate our investment strategy in relation with the Paris Agreement. And so we have developed cooperation tools. We have, for example, last year exchanged good practices on the measurement of the carbon footprint. And all of these discussion tools and common mechanism, we use it then in our operational partnerships. And I think it's very important not to keep on one side the coalition which is good for the climate, and on the other side your co-investment partnership. And so the idea is really to work together. For what concerns what we call the EMINA network, it's a newly created network of sovereign wealth funds with sovereign wealth funds from the Mediterranean basin and also from the Gulf. The idea is to really unlock investment in the regions, especially sustainable investment, and to invest in projects in various countries in renewable energies, in foster the SMEs ecosystem. And I really expect HCAP to join this new forum, as Greece, of course, is a Mediterranean country. And I think it's, again, it will not be easy because most of us, we have a sort of domestic mandate, and so we need to find a sort of national angle. So the challenge is how to find the right mechanism to invest together, but I mean, we will...
I think it's a valuable know-how from them.
Of course it is, and we look forward to working with them. And this is the cooperation that through these Duncan's and Lawrence entities that can help us come together. And of course, have the ESG at the top.
Is Lawrence a good example for corporation this? In the rest of our time, I would like to ask you, Gregory, how do you believe sovereign wealth fund could contribute to long-term growth by funding, for example, infrastructure and supporting the post-pandemic economic development?
We can, of course, this is something that we're thinking of making something for infrastructure because it's also not integral part of the RRF, so this is something missing and we have to see that. But as we said earlier, it is important that we build something which is for the next generations. And in all each of our assets, we need to see how we will improve them and how we can also attract private investors to help us do that. With, of course, the ESG being part of it. We are part of this 70% that Duncan mentioned. And it's a brilliant idea by President Macron that he created the One Planet, since if the sovereign wealth funds are with the trillions, they decide to invest towards ESG, then everybody will follow. Even PIMCO and the private sector will follow towards that. And this is also something good for us as a case study for transition, even the case of PPC, because we might not be with funds with the amount of funds as the others have. We have much less. Okay. But still, in the green transition, being leaders, it helps us to be on the same table and discuss the same thing, because it's something that we do now, and we believe it as HCAP very strongly, and as a board. We have Kostas Derdemesis, our chairman here, and Stefanos Giourelis, the deputy CEO, and we all together, we believe that this is the way to go, and it's also our commitment with specific targets that we will achieve it.
Duncan, I would like also your comment about this commitment on the ESG agenda.
Well, I would say there's probably, look at it in three ways. So one, you have examples like HCAP, where they're good long-term stewards of shareholdings in a way that governments can't do. They can take a long-term approach. The political cycle and the investment cycle are very different. So they can act as a long-term investor for the benefits of the citizens. So that's a really important point, the way they can actually do that. Second, because they speak the language of investors, they're recognized as a peer investor by other sovereign wealth funds. And because of that, and that language and the conditions that they have for others to invest, they can attract capital in. I've already mentioned how sovereign wealth funds are looking in all those different climate-related sectors to invest. Having your own sovereign wealth fund can help attract that money in. Not only we're seeing in all sorts of countries. I mean, we mentioned Lawrence mentioned India just before, but you see it right across the world that increasingly that's a model that happens. And then thirdly, what you're also seeing is that sovereign wealth funds, the big savings funds, have a long-term outlook. And therefore, they know that climate change is a long-term trend, so that they can see that they will get a long-term return on their investment. So all of those things are ways that sovereign wealth funds can influence the whole agenda and the transition. So, but it's very much about the long term.
Nice. Tina, before we closing the discussion, I would like to, if you can share PIMCO's view about the Greek economy and the prospects for the Greek growth, for example.
Yeah, so I think to kind of go back and reiterate kind of some of the points that I made before, but specifically to Greek. Look, I think at the moment there is a an uncertain environment that's affecting the global economy, and that is likely to have headwinds to growth. On the positive side, we have a reopening after the pandemic, and there is quite a lot of buildup of supply, and that's obviously led to inflationary forces. But of course, this invasion that's happened from Russia is causing a drag to growth, as well as these high energy prices. And our expectation is for Greece, it will be tied very closely in that sense to what's happening in the Eurozone, and there is going to be, on the base case, above trend growth. So that's positive, because we think that reopening will be positive. But if you talked about growth forecast from, say, if you looked at it this time last year, we would forecast growth to be lower just because of these supply shocks and these energy price issues. And similarly on inflation, if you think about the ECB is probably going to raise rates once and then have to maybe raise rates again in 2023. But I think the danger is on the downside, if there is a significant escalation, then that could lead to a higher probability of recession, particularly for Greece. I think, just to give you a couple of specifics, but coming back to your question, I think actually the environment's actually relatively positive for Greeks generally. You have a much better political backdrop, a better relationship with the Eurozone. You've seen much more cohesion there, so I think that is extremely positive. On that side, you've also seen significant progress on many of the structural reforms that have been going on for some time, and also you will get a significant amount of investment through grants and loans from the EU Next Generation Plan, which will be positive. While debt levels may still be high, the debt level is held much more by official institutions and longer maturities, so not as vulnerable. So on balance, actually relatively positive for Greece. But we have to acknowledge that this exogenous shock is the thing that's going to be the headwind for Greece and actually globally.
Okay, this is a positive message. I think we have 30 seconds. One last comment before we close. Xavier, Lawrence?
Yes, just stressing for sovereign wealth fund, to go to this sustainable investment. First, financing innovation from very early stage to the unicorn. Second, as Tina said, helping to go from brown to green in accompanying enterprises. And thirdly, financing on long-term, very heavy infrastructures and deal with the state in order to have a de-risking mechanism, perhaps, to finance this very important investments.
30 seconds. So I just want to say I've been quite impressed with HCAP and how it's been such a motor, a gateway to help the transition here in Greece, investing across the economy. And I think PPC DEI, as you call it, has really been a model for having transitioned from lignite now to renewable energy sources, and that helps companies and citizens make their transition. And the final point I would make, I just feel Greece is really well positioned. Your passion for ecology here, your young citizens, all the new breakthroughs to help lead the ecological transition in Europe.
Thank you very much for this discussion. Thank you very much.